Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. As always, I'm glad you're here. Really glad. Today we're going to talk about life insurance. When should I get life insurance? Life insurance can feel like one of those financial products that people think they'll get around to eventually. It's not super exciting, but waiting until later can often mean higher costs or even the possibility of not qualifying at all. So with that in mind, when should you get life insurance? First, let's talk about what life insurance is really designed for. So basically, life insurance is designed to provide financial continuity to loved ones in the event of your death. It replaces your income you would have earned, which helps survivors maintain some stability while adjusting to a major change. So contrary to popular belief, life insurance is not just about covering funeral and burial expenses. A lot of people think, oh, I'm just going to get life insurance to cover my, burial expenses. It's actually a safety net, or at least it can be when used ideally, for those who rely on your income to cover essential needs, things like housing, education costs for children, debt payments, everyday living expenses. Without life insurance, these expenses can become overwhelming for survivors. With life insurance, those same loved ones have a bridge to help them grieve without financial disruption. So let's talk about how to determine if someone financially depends on you. The right time to get life insurance isn't defined by an age number, it's defined by responsibility. So if you have people in your life who rely on your financial support, or you expect to in the future, more on that later, that's the signal. So common scenarios include young parents. Children rely entirely on their parents for financial stability. Life insurance ensures they can remain in school, stay in the same home, continue extracurricular activities if something happens to one parent. Also, if you're just married, have a partner. If you both work, many households rely on both incomes to cover expenses. So if one income disappears, the surviving partner might face some serious financial hardship. Also, even care for aging parents or siblings. If you provide financial support for family members, life insurance makes sure you can continue that care even if you're no longer there to provide it. That life insurance benefit provides financial stability and care. So let's also talk about why you shouldn't rely on employer-sponsored life insurance. It's common for employers to provide some level of life insurance as part of a benefits package. It's often seen as a nice perk, but it generally shouldn't be the foundation of your protection. So there's two primary issues with employer-sponsored life insurance. First issue, the coverage amount is usually too low. Most workplace policies are capped at anywhere from 1 to 3 times your annual salary. So while that might sound like a lot, it falls short of what's needed to cover long-term expenses for dependents. So hypothetically, let's look at this. A $150,000 salary, and let's say you've got a 2x benefit. So 2 times your salary is the coverage you can get for life insurance through work. If that survivor needs $100,000 per year to live on and you pass away, your policy only provides about 3 years worth of breathing room, and that doesn't even account for inflation. So it's not nearly enough time to cover children through adulthood, pay off major debts, or secure some lasting stability. The second issue with employer life insurance, coverage generally ends when you leave the job. The biggest risk of life insurance through an employer is that it generally doesn't follow you when you leave your employer. If you switch jobs, you're laid off, you decide to start a business, the policy generally disappears. I say generally because in some cases, you might be able to convert your employer policy into a private policy, but the premiums could be much higher, and that problem of low coverage still exists. You're converting a policy that's already too low. If you wait until that point to apply for private coverage, you might be older, you might be experiencing health conditions, and those things might make it more expensive or even impossible to get life insurance. Private policies are better because they stay with you no matter where you work. You have control over the coverage amount, and you lock in pricing while you're young and healthy. So why should you buy life insurance when you're young? One of the most common mistakes people make is waiting until they settle down to look into life insurance, but premiums are heavily tied to 2 things, age and health. And that means procrastination can get really expensive. 40% of insured individuals wish they had purchased their policies at a younger age, as reported by Policy Genius. Why is that? Because premiums rise with age. A 30-year-old in good health condition can often get a 20-year term policy for often hundreds of dollars less per year than a 40-year-old. If you multiply that cost difference over decades, even waiting just 5 or 10 years could mean paying thousands more for the exact same benefit, or potentially being uninsurable later, because health conditions can disqualify you. As you age, your risk of developing health issues increases. High blood pressure, diabetes, sleep apnea, all these are common conditions as people age. And that can make coverage more expensive or even create exclusions. In some cases, it might even disqualify you altogether. The healthiest and most cost-effective time to get life insurance coverage is when you're younger, often in your 20s or 30s, even if you don't have children. That way, your policy is in place and affordable once the bigger responsibilities arrive. So, how much life insurance do you really need? The ideal coverage amount really depends on your circumstances, but a few things to think about are: one, income replacement. The most straightforward approach is to replace your income for as long as your dependents will need it. So if you earn $120,000 annually and you want survivors covered for 10 to 15 years, that's going to point to about $1.2 to $1.8 million in coverage. Again, just a general example. One common scenario also is to plan to invest the proceeds, and that could generate income for a longer period of time. And there's a few different ways to create an income from a lump sum, but that could be one strategy. Also, think about debts and major expenses. Factor in things like mortgages, student loans, other major financial obligations. Many families also include funding for college for children as part of their planning. Also, existing assets. If you already have investments or savings that could support your family, you might need less coverage. So the goal is to fill the financial gap in your absence, not to generate excess necessarily. So you'll want to determine a more specific number based on your situation, but in most cases, workplace life insurance isn't nearly enough. All right, so what are some common life insurance myths related to this? Because life insurance can feel like a someday purchase, a lot of myths can come up and cause people to delay this. So first myth: I don't need it if I'm single. We talked about this. Not always true. If you carry debt, like student loans where a cosigner is liable, or support family members, life insurance can protect them. And if you think you might have a spouse or partner, have children, or need to take care of aging parents someday, you will want life insurance at that point, which goes back to the earlier point about locking in life insurance early when you're young. So if you think there's a possibility that at some point in your life, someone else will be relying on your income, whether it's a spouse or partner, children, siblings, aging parents, all of those point to a potential need to get life insurance early when you can lock it in at a lower price and you're eligible. Myth number two, also related: I can wait until I have kids. Again, buying young locks in better rates. If you plan to have children in the future, getting coverage early helps reduce those costs. Myth number three, life insurance is too expensive. In reality, term life insurance, especially if you're younger and healthier, can cost less per month than ordering takeout. The protection is really outsized compared to the cost. It's one of those things that's a low frequency, high impact event and a low cost event to insure against. So let's talk about briefly term versus permanent insurance, just for a quick comparison. So when you're looking for life insurance, you'll get two broad categories you can see. Term life insurance, which provides coverage for a set period, for example, 10, 20, 30 years. It's simple, it's affordable, and it's the most widely recommended for income protection. The second category is going to be permanent life insurance, and you'll see this show up in things like whole life or universal life. And it provides coverage throughout your entire life and might have cash value inside of it. So it sounds good, but in general, those policies are usually more expensive, often much more expensive. And they kind of fit in with specific planning purposes beyond just income replacement. So for most people, term life insurance is going to be the best option. Permanent insurance is really best explored with some professional guidance, and it often has a place in complex estate planning or really specialized scenarios. So for most people, term life insurance is the way to go. So let's wrap up and kind of recap. When should you get life insurance? The best time is before you need it. If anyone depends financially on you, whether it's young children, a spouse, or even aging parents, you should get life insurance now. Waiting will only increase your costs and introduces risks that you could leave your family unprotected. And remember, relying on life insurance through your job isn't generally enough. It usually disappears when you switch employers and typically doesn't cover the true financial needs of your dependents. So buying life insurance sooner locks in affordability, ensures availability, and most importantly, provides your loved ones or future loved ones with protection. Life insurance isn't about you, it's about the people who count on you. It's about ensuring if the worst happens, the people you love have the resources to survive and rebuild their lives. And so the right time to buy life insurance is now. It's early, before health issues rise, before it gets more expensive, and before life adds even more responsibilities to your plate. So if you've been putting it off, take this as a reminder. Love and responsibility show up in action. Getting life insurance means making sure your loved ones or future loved ones are taken care of no matter what happens. All right, with that, as always, I think you know where to find me. I'm on the web at elevationfinancial.com for those maybe who don't. Again, elevationfinancial.com. I'm on pretty much any social media you can find. And if you want to send me a note, you can do that through my website. Or if you'd like to book a free consultation, you're also welcome to do that using the calendar link on my website. All right, everyone. Thanks for joining me today. Have a great day. We will see you next time.